Hello and welcome to the special CNBC Africa ZIMEC 2014 debate. Today we're coming to you from the 4th Zambia International Mining and Energy Conference here in Lusaka. The panelists that are joining us this afternoon have the tough task of engaging us in robust conversation, looking at how do we grow Zambia's mineral and energy space through a sustainable development approach. A very, very warm welcome to Mr. John Dean. He is a business improvement coordinator with First Quantum Minerals. And next to John, we have Mr. Owen Silavoy. He's the managing director for operations with the Copperbelt Energy Corporation. And last but certainly not least, we have Mr. Victor Mudenda. He's the acting managing director with ZESCO. Gentlemen, welcome and thank you for making the time to join us. Now, a big theme we seem to have, and I'd like us to break it down into its bits and pieces. And perhaps let's start off with the concept of sustainable development. And maybe, Victor, you can break the ice by taking this question on first. What exactly do we mean by that?
Thank you very much, and good afternoon. I think sustainable development, as we understand it, has to do with the manner we use our energy resources to ensure continued availabilities for now, as well as for future generations. It has to do with the way we use resources in order not to undermine the environment, for instance. As you have seen the theme of this conference, it's talking about growth. So we are trying to ensure that we grow our economy, Zambia, for instance, we grow Zambia sustainably.
John, can we talk about sustainable development with a power producer in the same conversation with miners who are big consumers of energy? Is this a conversation that can be had in one room?
Sure, absolutely. Power is integral to any mining operation. It's one of the most fundamental inputs to the mine. And in the broader context of sustainability in Zambia, I think the two go together very nicely. I think from a mining company's perspective, sustainability is quite pertinent because it's obvious that there will be an end to the mine's life and there needs to be a life after the mine. So for us, it's looking at how can we work with government, how can we work with the government utilities and parastatals to ensure that there is something that follows the mines, and also alongside that to look at how can we find new mineral resources to extend the life of that.
Oh, and perhaps one of the key reasons why we're having this conversation is to prompt us to think about how do we do things differently and to prompt us to think innovatively. Perhaps give us the lay of the land of what a sustainable development approach might mean in terms of what we see on the power side and operations from a mining perspective.
I think that obviously is a very pertinent question when we're talking about sustainability. If I look at this in the context of Zambia, what you actually see is that the major driver in terms of demand in this country is the mines. And if you look at where Zambia is coming from historically, our major source of energy in this country has been hydro sources. However, because of the growth in demand, that is changing. There's need for this country to look at all possible potential sources of supply. And while we do that, we obviously need to look at the other side in terms of demand. What are the things that can be done in order for us to be more efficient in terms of the way we use electricity as we expand our demand? So there's obviously an interplay between how efficient we can use electricity and as we develop other sources of supply. I mean, we need to continue to develop hydro potential. Of course, this country's got a lot of hydro potential that has not been developed yet, but certainly we need to look at what are other innovative solutions that are there on the market. For example, renewables. Right. That is obviously a growing area everywhere in the world. So certainly Zambia needs to be focusing on that.
Let's stay on renewables, and maybe let's come back to you, Victor. Are we finding that from a policy perspective, there is the sufficient push and support to diversify the energy mix in the country?
Yes, of course. I think just to touch on the point of generation. We are, yes, predominantly hydro. I think, like what has been said, it's important that we diversify. I mean, we look at other generation mix. I mean, there's thermal, there's renewables, and so on and so forth. And what we have seen is that there is a lot of will and commitment from the government side, as well as from other players to ensure that we generate using other means of generation other than what we are now, which is hydro, which is 99%.
What does this mean for you as a mining player in the industry if we see that there's going to be a push towards diversification? Does it have a fundamental bearing on how you do business, and does it prompt you to rethink the current models that you're currently using in business?
Look, I don't think it's so much of a rethink as it is something that gives us comfort. When we see new projects for generation coming on stream, we have more comfort that we will have the electrons that we need to run our mines. And it's not only from hydro, as you say. There's a need for additional baseload, and one might look at coal for that. And one would hope that there's some renewables that are part of that portfolio as well. But Zambia has enormous generation potential. I think the hydro potential is something on the order of 6 gigawatts, of which only about 2 is exploited. I think the coal potential, although there hasn't been a specific study done at the country level, I suspect the coal potential is on that order as well. And then we've got plenty of sunshine in Zambia, so one can look at solar and one can look at geothermal and some of these others to augment that baseload capacity.
So far, we've tried to find a convergence between energy and mining, and perhaps, Owen, I want to bring you back here into the conversation to embed this around an infrastructure element. Whatever plans that the country has, all of this has to be embedded in a very robust energy infrastructure. What's the funding aspect of this conversation looking like right now?
Well, I think in terms of infrastructure requirements, in the energy sector, it's obviously huge. I think everybody knows that. And the need from a funding perspective is obviously high as well. So there is obviously need for various solutions in terms of funding. And if you look at the current sources of funding, most of these projects, I think, tend to be financed mostly through debt provided by external parties. We've seen that the financial sector in Zambia is beginning to play a role, but that role is quite small at the moment. So obviously, as players in the industry, we are hopeful that the Zambian financial sector will continue to deepen so that they are able to play a bigger role in future. And obviously, if you look at the needs that the financing parties, the sort of things, requirements that they want you to meet, those things are obviously challenging. I think it's an array of things that that one goes through when you're trying to access funding. So in as much as there is obviously a lot that needs to happen in order for this country to be able to meet its demand going forward, the challenges in terms of financing, I think, remain. And a lot of those have to do with both requirements by the financing institutions, and part of that, I think, has to do with the levels of, let's say, tariffs in this country itself. So one has to look at both sides of the equation.
Let's get into that a little bit deeper. And perhaps I'd like you to respond, Victor, to the lesser tariffs part of that sentence that he's just put out there. And give us the rationale behind the lesser tariffs and what this then does, and whether it acts as a deterrent to investors who actually want to put funds in but realize that the threshold for the tariffs is just far too low.
No, he's absolutely right, in the sense that I think the appetite for investment has to do with the tariff. If you have a cost-reflective tariff, obviously then you'll be able to see a lot of investment. Regions or areas within Africa where the tariff seemingly is on the higher side has attracted more investment. But in this case, again, what we have seen is that we haven't, government, for instance, hasn't just sat back. They've been looking at this matter, and the tariffs have been migrating. Obviously, maybe the level of migration or the rate at which the tariffs have been migrating may not be very high. But however, we have seen that in the recent past, there's been some appetite from investors. If you look back, government had created an office called OPPI, Office of Promoting Private Power Investment. That was I think in the mid-1995, and it was operational by the end of the 90s, and year 2000 it was fully operational. However, because the tariffs levels were very low, there was no appetite from investors to invest. But with the migration, with the increase that we've been obtaining, there's been a lot of appetite that is coming through. Yes, we haven't reached cost-reflective tariffs. However, there's been some appetite coming up from investors, and there's huge investments currently undergoing in the country in terms of energy generation.
I want us to stay on the issue of infrastructure, and perhaps to bring you back on this, John, and look at infrastructure broadly. Are we finding that Zambia has the right fit when it comes to the incentives that need to be in place to attract investors to fund the infrastructure deficit, whether it be energy infrastructure or infrastructure that serves the mines? Are the incentives right?
Look, I think it's not so much a question of adding government incentives as it is one of looking at market incentives. And I would argue, bringing the conversation back to the topic of cost-reflective tariffs, that at 6 to 8 cents per kilowatt hour for large load users, and probably a bit closer to about 10 cents per kilowatt hour for smaller residential users, there's plenty of incentive there. One can make a profit if they develop a new generation asset at those types of tariffs. I know specifically from our experience in Panama, where we're developing a very large mine and an associated coal-fired power plant, that it can be done for these sort of costs. So the coal cost of a new generation plant, the actual fuel cost is maybe about 1 cent per kilowatt hour, especially in Zambia, Botswana, Mozambique, these types of places, the actual fuel use. And then you can add to that the sort of operating costs of one and change cents per kilowatt hour. And you're looking at 2 cents, 2.5 cents per kilowatt hour of actual real operating costs. Now the trouble comes when you add financing to that, and this is tying back into the entire discussion. The problem in Zambia and the other countries that I mentioned is that financiers are demanding such high returns, and there's a lot of risk associated with it, with the offtake agreements, etc., that financing will account for 5, maybe 6 cents per kilowatt hour in terms of capital repayment and paying your lenders, etc. So there is a need to look at how we can bring down the costs of finance. But in terms of the actual costs of project development and operation of generation assets, there's no problem.
I want to push you on that one, John, and I want you perhaps to put on the table a potential solution. How do we bring down the cost of finance? How do we ensure that risk is just a little bit more palatable for all?
So if one looks at Southern Africa, and it's certainly not just Zambia at the moment, and asks the question, why are there deficits? Why are there power deficits? Well, it's all related to this issue of financing, okay? As we discussed, there's loads of generation potential in countries like Zambia and various others around Southern Africa. But how are they going to get developed? How are they going to get financed? And the answer to that is off of the back of a very strong power supply agreement. Okay? So if ZESCO goes and signs a power supply agreement with an independent power producer, they say, yes, we agree to buy power from you at X price, the lenders will be looking for some sort of credit enhancement mechanism. If you go and add to that some sort of government guarantee, or if you look at doing that back-to-back with a strong mining company, then it becomes feasible to bring down those costs of lending.
Owen, do we have examples? And I see, Victor, you're half responding. So let me give you an opportunity, and then I'll come back to my question with Owen.
Well, I think it also depends on how you model your project. You know, one of the models is PPP, triple P, public-private partnerships. But again, I think the fundamental drivers of PPP is, firstly, is that maybe you want, as public, as government, because I'm coming from parastatal, they want to maybe use the expertise, the efficiencies that come with the private sector. But the most important one, the second one, is that the sector that is borrowing, the public sector that is borrowing, wants to use perhaps an SPV, a special purpose vehicle, so that they hive off that funding as a project financing. They borrow off the balance sheet. You see, I think that's the case we've had in the case of Iteshi hydropower project, which is a 120 megawatt plant. But again, these issues of PP are very new to us. That was our first PPP.
Let's get into the details of that. You've got Tata Power as a significant player. What was the secret ingredient that's made it work? And if we were to take the purpose of being in this room as walking away with tangible outcomes, perhaps one of those things is understanding the secret behind Iteshi. Why does it work?
Like what I've said, I think the second fundamental driver of a PPP will be that you use, you are not borrowing as government, but you are using also the private partner, and you create a special purpose vehicle where you use that project vehicle to borrow the money. And so the private sector is involved in borrowing that money. Because the government is looking at various sectors, so the port of government is not looking just at energy, they will be looking at all these other sectors. So to use that model, I think you may succeed if the private partner plays a very, very critical role in financing that project.
Owen, private partners coming with their private money want government guarantees, irrespective of the view that we have this afternoon from the Paris Data. And I say that with a smile. How do we make sure that we get the combination right? Because until government steps in and takes on the risk that the private sector is meeting with funds, we're not really going to have very effective public-private partnerships. How do we think innovatively about making this relationship work?
I think in my view, that's a real challenge. And I think my colleague touched on that briefly. I mean, one of the ways of doing it is obviously if you can get your PPA guaranteed by one of the mine customers. However, if you look at that, the challenge with that is that most of the mines are obviously concerned with the level of tariff that is going to come from a totally new project. I mean, you're obviously talking about the marginal cost of a project, whereas if they are getting power, for example, from a utility, which has the ability to blend between the new cost of power as well as the cost from the old power stations, then obviously they get that benefit of the blending of the two.
John,
tariffs.
is that an accurate reflection of, or would you share the sentiments shared in that statement?
I think that there's maybe a bit of a misconception about what's a reasonable tariff. That's I guess the opinion that I would bring to bear in this conversation is that when you start talking about 12, 14, 16 cents for a new project, it's just crazy. It can be done for so much cheaper than that. And I think that if there were a private and public partnership that were to come to First Quantum and propose a reasonable tariff that we agree is sensible and that a project can be delivered for, then we would be interested in having that conversation. But it's just a difference in project development and views on costs.
I think just to touch on that point, I think one has to be mindful of the source of energy, because if it's thermal, it has its own variables. If it's hydro, it's different. And you have seen, if you look at renewables, take for solar, for instance. The cost of solar in the recent past has really gone down in terms of equipment and everything. But previously, the cost, even when you look at the tariff, it was pretty high. It's only now that it's coming up. So it depends which source of energy you're looking at. Like what has been mentioned, if you're looking at the case, let's say in Zambia, if you're going to get power from an existing, power station, obviously the cost will be much, much lower. Whereas if you're going to look at the new plants, the cost is very high. If you look at the IPPs, the independent power producers, Mamba, for instance, EMCO, I think CC will be coming with the Kavompo and whatever. The costs are on the high side. And if you compare that cost to the price, or the selling price, which is just quite, there's a huge difference.
Let's look to continental examples. We've got the example of Nigeria, which has been on that journey towards privatization of the power sector for quite some time now. And I throw this question to any of you gentlemen to pick up. Do we have credible examples of the continent that we can look at and say, perhaps this is one way of doing things in Zambia? Is there an example that has worked where we've seen privatization that has seen the investors benefiting, that has seen the broader population that seeks to be electrified benefiting, and business in particular, the mining houses saying, this is a tariff that we can live with? Does such exist?
If I can go first on that one, I think it's probably one of the areas that one could look at is, I think there was a discussion earlier in one of the sessions where somebody was talking about Brazil and maybe the so-called tiger economies. If you look at why they were probably successful in this area, I think the major factor that contributed to their success, somebody already mentioned, was the cost of capital. I think they were basically able to access in-country what maybe you would call quite competitive rates in terms of accessing capital. So I think if we are to be able to deliver projects at costs that would easily please, let me particularly refer to the mines, certainly we may have to be a little bit more innovative in terms of how we access our capital. One of the ways is obviously the triple P that has been mentioned, but I suppose, as you already noted as well, it's some of these issues that we're already talking about, those projects will obviously encounter those. So it's obviously not a straight, or let me put it as an easy answer, but it's something that I think needs us to keep working on.
Do you have an example of a country on the continent that you can draw
on the continent? I think you mentioned Nigeria, and
so you're going to borrow my example.
I'll tell you, we are investors in Nigeria.
Okay.
And I don't think mentioning Nigeria now in this context is exactly right, because Nigeria is grappling with probably the one of the biggest deficits in terms of supply gap. So Nigeria itself is obviously looking for solutions and probably looking for what are the best examples. So Nigeria is possibly looking to Zambia at this moment for
possibly
yes,
for answers.
Nigeria, you have access to electricity for only half a day, and in Zambia, we've got customers who have access to electricity 24/7 basically. So I don't think Nigeria is one of the best examples. Whereas things are improving following privatization in Nigeria. There's certainly, I think, a lot that needs to happen in that country as well.
Any other examples on the continent? And if we don't have a continental example, it's okay to say so and give us a global example.
I think, in my view, if the projects that I've looked at in terms of...
Oh, and you mustn't let these two hide behind you. They actually have to take the question as well. So
I was going to make a very short statement. In terms of the projects, when I look at particularly Southern Africa, and I think I certainly do not share the view of my colleague on my left. When I look at the cost of these generation projects, almost all of them are costing beyond 10 cents per kilowatt hour. So I think it's an area that we need to continue working on if we're going to bring this cost down. Thanks.
Victor, I'm going to put you in the spotlight. Is there an example that works on the continent where the balance has been struck?
Yeah, well, I may not have the examples, but I think as I would like to talk about Zambia. I think in Zambia we are moving. We are moving at a very fast rate in terms of a lot of government policies. Government is looking at various policies, reviewing a lot of policies. If you look at renewables, for instance, we don't have refit, what they call refit, renewable energy feed-in tariffs. But I know that government has already set up a committee which is looking at that. And I know that government has been willing, has shown a lot of commitment in terms of trying to have the tariffs to cost reflectivity.
Are you happy
And
with
also,
the pace of progress?
I think I'm very happy because I think it's also our part to ensure that we support government. Government has been very supportive, even in terms of financing. In the national budget, they've been giving us a lot of support. So I think government cannot work alone. We have to be private, public, we have to work together to support government.
John, are you happy with the pace of progress?
In terms of the upward march of tariffs, am I happy with that? I suppose I'm not particularly pleased with that.
Are you happy with the argument that's been made on the other side of the table that the government is doing everything that it can in its power at the optimal pace to try and find the right balance?
Absolutely. I think the government is putting a lot of energy into finding the right solutions and supplying energy and doing it at the right price and doing it in time. There's always a delay, or there's always a challenge with execution, and a lot of that's related to financing. And I think that we can collaborate a bit more than we do at the moment. I think that we can work hand in hand, the mining industry and the government together, to try and tackle some of these challenges together.
And on that note of collaboration, we're going to take a quick break, and we'll see you right after this in 2 minutes. Welcome back. You're still tuned into the special CNBC Africa ZIMEC 2014 debate. We are tackling how to grow Zambia on the back of a focus on sustainable development, and in particular looking at minerals and resources. Now, we've spent a lot of the first part of this show talking about energy. We're going to change gears now and give just as much attention to the mining sector. Gentlemen, welcome back again. Great to have you. We've had John participating very actively in the energy debates, but so I'm going to expect the same from the gentlemen. And let's start off, maybe Victor, you had some very interesting comments when we were having our conversation yesterday. What is the current state of mining in Zambia? If we look at the history in terms of where we come from and where we want to go, how would you describe the health of the sector?
I think in terms of the mining sector, what I can say is that the mining industry has been growing. And in Zambia, it's been growing very rapidly. If you look at their requirements in terms of energy, we've been receiving requests which have been unprecedented. There was a time when seemingly everything had stalled. There was seemingly no growth. But in the recent past, I think the past 5-6 years, we've seen even new mining towns opening up. For instance, our mining has been predominantly in the Copper Belt, which is one of the 10 provinces of Zambia. But now the mining has shifted to the northwestern province of Zambia, meaning that there's some new minings that are coming up. I think what I'm just saying is that there is growth. I think the mining is growing. I may not have the numbers, but I think there's significant growth in that sector.
Do you concur that we're seeing positive growth? And if you do, let's also talk about opportunities where there may be pockets of growth that are not yet in market. So if we look at where are the prospects for the mining industry in Zambia?
Absolutely, without a doubt, there has been extraordinary growth in the mining industry since the late 90s when privatization kicked off. First Quantum started in Zambia. We're a Zambian company originally. We started in 1996 at a small tailings project at Bwanamakuba. and we've now grown into a $10+ billion company that's operating around the globe. But we've continued over this period to continually invest back into Zambia, building new projects in Zambia. So we went to Kansanshi and developed the largest copper mine in Africa. Last year at Kansanshi, we produced over 270,000 tons of copper. We're now investing over $3 billion over the last several years and into 2015 to expand capacity at Kansanshi, to build a new smelter at Kansanshi, and also to develop a new series of mines about 120 kilometers further west of Kansanshi at the Trident project. So there's a new copper mine called Sentinel, and hopefully a new nickel mine called Enterprise that we're underway, and we're spending $2 billion out there at the moment. It's the biggest single investment in the history of Zambia, as far as I'm aware. So I think that is very clear evidence that there's a boom happening in mining in Zambia, and we're delighted to be a part of it.
There's a boom happening in mining in Zambia, Owen. Perhaps let's bring the ordinary Zambian into this picture. Are they seeing the benefits of that boom?
That's interesting. I wish I was very competent to comment on that. One thing I would say from Copperbelt Energy, we supply power to the Copperbelt province of Zambia, which is the original mining province of this country. And what we have seen through the supply of power to the Copperbelt, there was a time on the Copperbelt when everybody was worried that this province will soon become sort of a ghost province because the mining activities were going down. The number of people employed by the mines was obviously also dwindling. And what we've seen, obviously, with the coming in of new investors is that there's been a huge shift, both in terms of the numbers that are being employed, in terms of life extension to these mines. If you look at the biggest mines on the Copperbelt, which are Konkola Copper Mines and Mupane Copper Mines, both of those mines are doing projects to sink deep shafts, and those projects, I think from the estimation, are sort of extending the lives of those mines beyond 20 years. So obviously there is a future for the Copperbelt, and I think in my view I've seen this translate to, if you look at the number of housing units that are being put up on the Copperbelt, you'll be amazed. This has never happened before. We're coming from a time when all these things used to be done by government, but now you see private individuals doing all this. I've seen shopping malls coming up on the Copperbelt. So certainly there is benefits that are trickling down. I think I can say that with a level of confidence.
What should South Africa be learning from this particular experience, keeping in mind that the longest and costliest strike has just come to an end just yesterday? So you think about that. Let's go to Victor for now. Victor, I heard a very interesting comment earlier today from a representative of the World Bank, and he said that what Africa suffers from is not a resource curse, it's a governance curse. I'd like you to respond to that.
Yeah, but obviously in terms of governance, I think one has to understand that we are on the development stage in our history. Zambia is growing, and it's growing at a fast rate in all the sectors. So even in governance, there's a lot of things that we are learning. We are only, I think we are turning 50. As a country this year, 2 months from now. And we have achieved quite a lot. If you look at governance, this is perhaps maybe the only country where you find peaceful elections, a transition of government, for instance, and so we have never fought a war. So I think for me that's a huge plus in terms of investment. You need an environment where you can have predictability. You need a very stable environment, and government has worked very, very tirelessly to ensure that this is in place. It's not an easy thing. It's just like a home. Some homes fight, others don't fight, but you find that in this country we don't fight.
Yeah.
I think, to me, investors should take advantage of that, and we may have certain things that we're not doing properly, perhaps. But again, we are learning. We are open, very open to learning. We're open to new innovations. We've received a lot of investors from from all over. We sit with them and we argue until we come to certain understandings, and we proceed that way. I think that is key for any development to take place.
I like one of the words that you've used, and that is predictability. And oftentimes you'll always hear that investors want predictability and consistency. Now, John, I'm going to put that in front of you and say, is that still the case, even if the consistency and the predictability is not what you want to hear? And the reason why I put this on the table is that I want us to tackle the elephant in the room. I want us to talk about the increased ownership of the state in mining assets. I want us to talk about the calls for beneficiation. Governments can be consistent and predictable in terms of putting those demands on the table to investors, letting it be known that this is what they expect as a country. How has that trend that has seen a stronger shift towards government negotiating a little bit more strongly changed the way we view the relationship with government from a business perspective?
Sure. I think Victor hits on sort of the most important point for a global investor. When we're assessing opportunities around the globe, we look at a couple of things. We look first, where are their resources? And then secondly, we look and see where is there an environment that's stable and predictable where we can invest and have some sort of expectation of continuity. And Zambia has been one of those places. If one looks around the mining industry around the world right now, and you raise the issue of South Africa, you can see that investment is drying up at the moment because there's a lot of strife, there's a lot of uncertainty, and investors are afraid of that. So I think Zambia's history since privatization has been one where there's enough predictability, there's enough stability, there's enough conversation happening between the investors and between the government, and we sort of know where things are going, that we've been comfortable enough to invest here.
Back to South Africa, Owen. What should the South African government, the unions, the mining houses been thinking about 6 months ago before the strike that just ended?
I think in fairness, I obviously don't have the details in terms of what has led to the current situation. One thing I would say is these issues are always challenging, and it always calls for action to happen when it should happen, and probably things that should have happened at times when they should have happened didn't happen, and I think
sure, that's a lot of happenings that should have happened that didn't happen when they should have happened. So here is your opportunity. Almost to pretend that you were the advisor to the current president, the new administration that has just taken office. It's barely been a month. The new Minister Ramahloti, who I know watches CNBC, so if you're watching this, Minister, here's a piece of advice about what you should be focusing on as you settle into your second month. What should the South African government be thinking about to ensure what we've just experienced does not happen again? And let me be fair, I'll give everybody an opportunity to play advisor just for a second.
I think any situation obviously calls for analysis, root cause analysis, and I think taking obviously decisions at the right time. As I said, I'm obviously not privy to the details of what the issues are, but I would imagine the problems are not insurmountable. I'm sure the minister, with all his advisors applying themselves, I'm sure they'll be able to resolve the issues.
I'm worried. I think he's looking for a post as the next president of the African Union. We're not going to get an answer out of Owen on this one. Victor, what went wrong in South Africa?
No, I think I agree with what he's saying. Because I think one point that came out, which maybe you missed, is that whenever you have a situation like this, it's to resolve the situation in a timeously manner. You need to because issues like this, if you don't resolve them in good time, I mean, you lose out millions of dollars, you lose out a lot of money. You need to sit down with the disputing factions and then try to find an amicable solution within a reasonable so to speak, a reasonable time. So I think time, to me, I mean, like this usually say, time is money. The more you don't work, the more you are on strike, the longer you are on strike, I think the more money you lose. And the economy, I mean, depends on these large facilities, large mining companies. So as you may not see the effects now, but obviously the effects will be seen soon.
John, let me get your presidential advisory, and also let's get
To
whether
the president now. I thought it was just the minister.
we're escalating this issue. This is a big issue. We're escalating it.
If I'm going to be advising the president.
But let's also take your comments. I'm quite certain, as a player in the industry, even if it's outside of South Africa, you're watching the developments and you're asking yourself, does this have the potential to spill over into our own operations? Does the victory that the union seems to have claimed, can that create or boost confidence in the startup of unions or bolstering of existing unions to take on companies in Zambia?
Look, I don't want to address the issue of unions and all of these different groups, but I guess what I will say is there's always going to be different stakeholder groups, and they're always going to want something that's slightly different. It's a very difficult job to run a country, and these guys and the ladies as well have the challenge of balancing those various interests and forming some sort of shared, united vision for the future. What does the country want for its future? So I'm a miner and I want to get paid more, or I'm a minister and I want to increase the mining in my portfolio, or I'm government and I want to increase my revenue. Everyone wants something, right? And it's just about understanding and talking to one another and coming up with some sort of shared ideals, coming up with something to say, look, as a country, this is where we want to be in 10, 20, and 50 years' time. And then working together and having conversations together, not going against one another, but actually having constructive dialogue between those stakeholder groups to form a shared vision, and then hopefully everyone can understand how they can fit into that. And if they need to mold a little bit, then they can mold a little bit. But it's in the interest of the entire country rather than my own self-interest at that point.
Let's open up this rather robust and insightful discussion to the floor. This is your opportunity to engage the panelists. We're going to be taking 3 questions at a time, kindly requesting to please identify yourself, pose your very brief question, and then we will allow the panelists to respond after the first round. Now, are there any questions arising from the floor?
When Zambia has got so many wonderful resources, your mining resources and particularly your energy resources. On your energy resources, you've got manpower, and more importantly in Zambia, the males are lazy. You've got Mafazi power. You've got animal power. You have got 3,000 hours a year of sunshine. You have got timber, but you're cutting out 6% of your timber every year for charcoal to heat for your primary energy. That is causing you dropping water tables and lowering your yields from 5.6 tonnes per hectare per annum down to 1.2 tonnes per hectare per annum. It could be multiples of 10 tonnes per hectare per annum. And you can grow economic crops. You have got minerals. You have got energy minerals. And what are you doing about your energy minerals? Oil from coal, your Sasol process. You have thermal energy, geothermal energy. You have got thermodynamics. You have got chemical energy, hydrogen. You have got nuclear, lots of it, which you're only stacking. And you have got waste. And with your waste, you're poisoning your water tables. So what are you doing about energy, renewable energies? There are international funds available to help you, CDM, CER, carbon trading. Why not utilize those?
Thank you very much. The question is, what are you doing about renewable energies? Let's take the question at the back, please. There was a hand there. If we get the microphone.
My question is directed at the distinguished acting MD of ZESCO, and it's on this issue of cost-reflective tariffs. I know that costs is relative. Some components of your cost might be similar, like financing, but some facilities may produce power, generate power at a cheaper cost than others. My question to you is, can you assure the Zambian consumer, assuming we back the idea of cost-reflective tariffs, that we will not be paying for inefficiencies if you went to a cost-reflective tariff? Thank you.
Thank you very much. And let's take the question on this side of the room.
Thank you very much. My name is Andrew Kamanga from Northwestern Energy, which is in power distribution. The discussion is quite stimulating, and I've just noted a few comments from the panelists. I think on security of supply, ZESCO did indicate that we are moving away from hydro and looking at coal, and that is very, very good. But of course, it's not sustainable in the long term. And then on the key challenges, there was mention of low tariffs, and I think John did highlight the fact that there's possibility of reducing project costs if one was to look at issues slightly differently. But I'll come to that in a minute. I think when we come to the possible solutions, I think if you look at the historical setup of Zambia, all the generation has happened in the south, and we've had to transmit all the power all the way to the load centers, which essentially is up north. But looking at where we are coming from in the last 50 years, I think we need to take a slightly different innovative approach for the next 50 years. And my view is that what we should start thinking about is, of course, we are looking at a new generation, which is not being fully supported by the transmission infrastructure. Shouldn't we as a country start thinking of splitting the country into grids so that we are able to deliver generation very close to the load centers? In my mind, I know that we've got mines opening up in the northwest, but other than the Kabompo Hydro, which CEC are developing, there's absolutely no mention of any potential to try and get generation in the northwest. So that is one key issue which we need to start thinking about. If you look at the northern part of Zambia... So
I'm going to ask you to please be very, very concise.
I'm just winding up.
All right.
If you look at the northern part of Zambia, I think we've been talking about the Zambia-Tanzania interconnector. And yet on the other side, there's a lot of gas which Tanzania has been able to discover. Shouldn't we also be thinking of getting new generation using gas into the northern part of the country? I leave that to the minister. At least I've seen him here. Thank you very much.
Thank you very much. So let's get some responses to the question. Anybody want to go first?
We are endowed with all these natural resources and so on and so forth. However, we are cutting down trees, and the water table is even going down and so on. I think I'll firstly talk about government and then come to ZESCO. As government, the government has been very, very proactive. The current government, when they came into office in 2011, they immediately started looking at the issue of renewable energy. As we are talking, there is a committee that has been set up, which is being headed by the acting director of energy, which is looking at ways and means of how we can come up with a policy. Because at the end of the day, you have to feed into a policy, and then that policy will drive how everything will be implemented. For instance, if you look at solar, we don't know what tariff to charge. So we may be forced to look at case by case, look at the financial model, and so on. In the end, you end up with different tariffs for different suppliers. However, I'm glad to mention that government is looking at that, the issue of refit, renewable energy feed-in tariffs, as well as other sources of energy. How do you deal with the feed-in tariff?
Yeah.
So that is receiving active attention.
Victor, I'm going to jump in only because we're running out of time, and I want you to perhaps go into the next question, which was, how are you going to ensure that consumers do not pay for inefficiencies?
Assurance of paying for inefficiencies. I think one has to be mindful that, firstly, ZESCO is not the only generator. We have IPPs, independent power producers, and the issue of tariff is not it's not something which you just dream about. In 2004, somewhere there, the ERB, the Energy Regulation Board, initiated a study called a cost of service study in order to determine what is the price of the electricity. And at that time, when the reports came by from international consultant, it showed that we needed to immediately increase the tariff 150%. As at now, we couldn't do that. And there was a migration path that was given. We never even implemented that for obvious reasons. As at now, the ERB is also trying to review that cost of energy studies. If you compare the price that, for instance, the IPPs like Mamba are going to sell to ZESCO, they are about twice the price we are selling at.
Right.
And that's not ZESCO's inefficiency or whatever.
Again, I'm going to be the bad lady
power,
and not the bad guy.
Absolutely.
I've got less than 4 minutes and I need to get these
point.
comments. So let's get that final sentence in and then let's move on. Yeah.
Thank you so much. I think power costs money. If you look in the region, you asked us to compare with our colleagues. I think in the region, we are the lowest. We are the least in the region. So if you go into other places, they're paying 3 times as much. And they won't even find electric stoves. They have gas stoves. Yeah, we find people who come to us and tell us, oh, this is the first stove I've bought. Where I'm coming from, we don't own electric stoves. So the point is, if we are going to develop this country, energy is the driver for all sectors of the economy. We need to invest and we need to have the appropriate tariff.
Passion at its best. Owen, you have now less than a minute.
Well, maybe to comment on renewables from the CEC perspective, we certainly think renewables will play an increasingly important role in this country. Some of the issues that have been raised in terms of improving the general performance of the system, we think renewables can assist in that respect, because this basically speaks to what is called distributed generation. However, to facilitate that, I think the issues that my colleague has mentioned, having the appropriate framework, having the appropriate tariffs, all those issues will obviously come in. In terms of the efficiencies in terms of the cost of electricity, I think if we have a regulator that's obviously doing their job, that is setting their role. They have to ensure that you see the costs that are passed to the consumers are obviously efficient. And I think the regulator has been around for some time in this country, and one hopes that obviously that capacity building has happened over this period, and that process is obviously continuing.
John, final comments.
Sure, I'll just chime in on that to follow on from your comments about cost-reflective tariffs and whatnot. It's absolutely critical that cost-reflective tariffs be paid. Every industry and every consumer should want to pay cost-reflective tariffs, because if we don't, then ZESCO and any other generator or participant in the energy sector isn't going to be able to do the maintenance that it needs to do, isn't going to be able to take care of the equipment, isn't going to be able to reinvest in new equipment. So I think it's absolutely critical that cost-reflective tariffs are paid. But what I'm trying to suggest is that we also need to have a conversation more generally and carrying on from this about what is cost-reflective. And maybe there's a new term that needs to be coined, and that's efficient cost-reflective tariffs. I'm very happy to pay efficient cost-reflective tariffs.
We've had certainly insightful and robust discussions. Thank you so much for making the time to join us. Don't forget to talk to us on Twitter. You can use the hashtag ZIMEC. You can follow any of the panelists. Follow myself at Nozi Pombanjwa, as well as at CNBC Africa. A very, very big thank you to John Dean. A very big thank you to Owen Sulavwe, and a big thank you to Victor Mudende. Thank you for making the time to join us from CNBC Africa. It's goodbye for now.